Hello, YouTube. The stock market is up an incredible 10% in 15 sessions. So where are we going to go from here? That's the question for this weekend's video. We're going to go through a bullish scenario, which shows us that the bulls are due for a win to go even higher. And we're also going to review the psychology chart, which says that maybe we're topping out on the S&P 500. We're going to come back and look at these two charts in a second here to give you both the bullish and bearish scenario. But what I want to do first is preview the rest of the show. We're going to go through and look at our algo system. We have specific alerts on the S&P and QQQ. We're going to look at those in a moment. We're going to talk about how we are re-entering greed. We can also note that short sellers are not relenting. They are still short by about 50,000 contracts as of the Friday close on November 17th. We can also note that it's been a pretty nice week for stocks. Most things are up unless you're Walmart. We can also note that we got NVIDIA earnings coming out on Tuesday after the bell. That's going to move the market. We're going to pay attention to that because they report on Tuesday, November 21st at 4:20. Elon will be proud. And we're expecting a beat for earnings. What's the guidance going to be? That's going to be important as well. So is Jerome Powell going to give us the all clear to go higher, or are we going to get a humbling around the corner? I'm going to talk about that in a moment. But like I mentioned, we're going to preview the show, and I'm going to tell you what I think is going to happen this next week. Looking at all the data that happened this week, before we look at what comes next week, is really important because Jerome Powell, again, we're going to think about what he said at the last meeting because this inflation data that just came out, it looks very constructive. And people are agreeing with him. Very renowned economists like Larry Summers giving us the, okay, guys, time to go up. And Jerome Powell saying, okay, guys, hold my beer. Might be time to go up as well. So what does Larry Summers tell us? Because he's been a very big critic of the Fed. Wall Street Week, Larry Summers puts odds of US recession at 25%. Whoa, that looks like a stamp of approval. Everything looks like it is A-okay. And the reason why I find this particularly notable is because we're going to look at Fed meeting minutes on Wednesday, and we're going to be looking back to the last meeting where Jerome Powell's told us that he's proceeding carefully and he's leaving the door open to another rate hike. And after commentary like Larry Summers here, after the CPI report delivers better results than most people would have expected, if the economic data coming out this week is going to be largely around the Fed releasing their Fed meeting minutes on Wednesday, if Jerome Powell was really hawkish during his commentary and during the Q&A, but the meeting minutes do not reflect that same hawkishness, I think that could be an all clear for us to go higher. The second thing I want to talk about, which could be a bullish scenario, is NVIDIA. NVIDIA is the catalyst that dragged the market dramatically higher before. And we're going to find out on Tuesday whether or not they can do it again. So again, we're going to go through and talk about the bullish and bearish scenario with this backdrop. It's going to be a shortened trading week as well. So after we get those FOMC meeting minutes, it's going to be off on Thursday and then a shortened day on Friday. So let's see exactly what these guys were talking about. And if we go back here to the CFTC net short positioning, these guys just can't seem to help themselves. We talked about how they go short, double down, they go net long, but there's a period where they usually fight it before they ultimately go long. They do it here as well. They short, double down, go net long, but they fight it one last time. Here they go short, double down, and now they went net long very briefly, and now they're back to short, which means what? There's fuel to go higher. We can also note that we're into greed. So if we're seeing higher lows and higher highs on greed, low, higher low, higher low, high, higher high, higher high. Well, we want to see that same thing happening on the chart. And we're currently here at an inflection point. So now let's go through both that bullish and bearish scenario. I'm going to ask you for a huge favor first, though. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really appreciate that. And I'll thank you ahead of time because you guys have been just such a great audience. All right. So if you're looking for more commentary as well, I did upload a stream that goes through this analysis in great detail. I'm now going to just provide a summary. So I understand that it's currently not October, and I'm looking to the October pattern. The reason why I'm looking at October is because the pattern is what I'm identifying here. The pattern is what's important to me. So I'll show you what I'm looking at over here, and then we're going to look at the S&P, and you tell me if it looks similar. Here we have our high. I want you to pay attention to these levels as well. So we got shoulders, we got a head. That's important. Keep that in mind as I go to the chart in a moment. We have our cut, one dead cat bounce, our lower low, a bigger dead cat bounce, our lowest low, and then we snap all the way back up to where we are right now. Also note we form a cup and handle inside of here with a little bit of consolidation, and then we go up. All right, now let's go back over here to the chart. I'm now going to remove everything. We're going to go to a line chart because that's what the seasonality chart looks at. All right, let's go here. Let's grab a paintbrush. There we go. So we go one cut, dead cat bounce, second cut, bigger dead cat bounce. There's our lowest low. And now here's the cup and handle, cup with a handle, and then we rally all the way back up to roughly the previous high. We can also note that the dead cat bounce roughly corresponds with our left shoulder. There's our head, there's our shoulder, there's our shoulder. So this looks very similar. One cut, dead cat bounce, second cut, bigger dead cat bounce, third cut, full reversal all the way back up to the top. Let's go back here to the seasonality to see that it matches. One cut, dead cat bounce, second cut, bigger dead cat bounce, third cut, full recovery all the way back up to the top. What's so important here is that if the seasonality is going to play out, we're due for a big rally here. And that's why I'm focusing on NVIDIA, but also on the Fed meeting minutes, because honestly, I don't know what else is going to make this thing go higher. I thought it would have been the meeting between Xi and Biden. It wasn't. So what is it going to be? Well, if we're going to repeat the seasonality like we do on average every 20 years, again, keeping in mind that what this chart shows us, let's go back and bring our lines back here. What this shows us is the average over the last 20 years leading up until 2022. So it's not like we have to be perfectly tracking it. I think it's close enough. So I'm still giving it some credence or evidence. But as we now look here to the bearish scenario, here's where it's a little bit hard to ignore it. So we look here, we have our grind higher, we go all the way down, form some kind of W, and then recover all the way back up to the top. And what does it say right here? Drat, I'll buy again. At least it's cheaper than last time. That sounds like greed. All right, so here we have our March higher. Here we have the first cut, right? We'll just start off right here. So there's our first cut, right? Boop. There's our W, and then we retrace all the way back up to the high. Here's what's different though. High, lower high, lower high. So what do we have? We have a high, lower high, lower high. In case you didn't hear it the first time, all right? What do we got here? Well, high, lower high, lower high. That's why you're able to buy back at a lower price. So the concern for me is just that unless we form another higher high, I'm not sure what's going to happen here. This is an inflection point. It's a key decision. And frankly, I'm just not sure. So what I'm going to do is actually caution something this week that I'm going to thank Milton for calling it out in the stream earlier. It's exactly what I was going to say before. It's time to exercise patience. And I'm talking about patience with a A-Y-T-I-E-N-C-E, right? The first part here being patience with a Y. Because if we can afford to wait until the chart tells us that it's actually all clear, that's when we can do well. I want you to pay attention to one part right here as well. So if we're going to go up, 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 all the way into the end of the year or December, here's a part where if you have not participated in this recent rally, you can still get in at an area where we're a little bit more de-risked. If you don't think the market's going to go higher, then what you can do is let it go up and you can buy on the back test. We can note here that what used to be resistance should act as support, which means the high we just looked at on the S&P 500 should act as support as we go up for the next higher low that gets staged. So low, higher low, higher low, higher low. We should keep forming higher lows and we should keep advancing. That can be a chance for you to get in for the last run going into the Santa Claus rally. All right, now that we understand both scenarios, I want to look here to what our system says because we're going to be launching our Black Friday sale starting on Monday. And I've been making an effort to actually show what our system does more than not. So here we can note and see that we have a lot of invest alerts. You can pause the video if you want to read the different times. It goes back to 2022. And now most recently, we have something called our risk reward added in here, which means our system thinks it's going to go up on an invest time frame or a weekly chart, which means it's good for at least 2 months. So take November, add on 2 months. That gets us to January. That gets us through the seasonality chart. And it's both the S&P and QQQ. All right, well, that looks nice. Show me what could be bearish. Well, over here, we got, if I look here to PSQ, we talked about this as well. We have a failed alert, which means that on a daily time frame, which is good for up to 2 months, again, also into the end of the year. So we have a conflicting signal here. When in doubt, zoom out, use the higher time frame. But this shows us that there might be a counter trend happening here. So PSQ has failed on an alert. It gives us a risk reward of roughly 6. So the reason why we want to pay attention to this is because SH is also due for an alert. So SH and PSQ, we went through the risk reward. Man, the risk reward looks pretty good right now, where if we stop going down and start going up, that could be a really big trade. So the warning signs I'll be looking for are going to be PSQ and SH. And I have more notes for our group. So if you want to learn more about that, again, you can either join us for a 14-day free trial right now or wait for our Black Friday pricing to go live on Monday. I'm also going to be streaming all week. So this way you guys can ask questions and I will make an effort to actually show everything our system shows you. All right, so now tell me the story that I need to know going into the rest of the week. I want you to pay attention to two different charts here. We're going to look at the weekly chart for the S&P, and let me just pull that up here. And I want you to pay attention to this number, 439. So 439, let me make it really clear here, 439. Why 439? I'll tell you exactly why, because that is going to be the threshold for the bulls to keep the chart going up. So let's go back to that seasonality chart just one more time, because I want to make sure this is crystal clear. We cannot afford to go to a dramatically lower low. This is a daily line chart, which means that we got low, higher, low, higher, low, higher, low, higher, low. So if we come down and form a weekly lower low, it means we're not doing the Santa rally. Where do we need to break to invalidate that area? It's 438.42. So if we don't hold 439 and we go to 438, we're printing a weekly lower low. And because we're closing at or near the high of the week, it probably means we're going to get an upside move or at least a retest or a higher weekly high. And then if we fail, that'll turn into a bearish engulfing candle. That is not good. We have one right here. We also have one going back to the high. And that's usually a reversal signal. So if we're looking for the head and shoulders, knees and toes, that's what I'd be looking for. So as long as we maintain last week's low at roughly that 439 we just talked about, that would be a win for the bulls. So team risk reward right now is bullish as long as we are green on the week and going higher. Otherwise, we have to be ready for roughly a 12-point decline. If you're not ready for that, maybe it's time to get ready now. And then finally, looking here at our monthly chart, the guide that I've been using, we're looking back to November of 2020, and we have a higher low. And then we note that we have a close over the previous candle high. Keyword here being close. If you looked at November of 2023, the higher low is holding as of now. It's currently November 18th. But the part here that's missing is that we are currently over the previous candle high. We've not yet closed over that high. So what does that mean? It means next week and the following week going into Thursday, November 30th, that'll be Thursday, right? That'll be a Thursday. We have to hold 438. And the part that's so important here is that we need to close at or near the high. Why? Otherwise, there's not upside momentum, which can drag us higher, which means Santa rally and even more. That's the 25% odds that we see for recession from Larry Summers. So where are we right now? Well, we're currently at the high of the month, and we're currently over the previous candle high. So if we just go sideways for another 2 weeks, I would say that's perfectly bullish. We can cool off the indicators like RSI and MACD, and that would tell me that, hey, like sideways is actually pretty constructive. But I'm not sure that sideways is going to be good enough if we're actually looking for more into the end of the year. If we look here objectively one more time, big move into November, small move into December. So if we're looking for a dramatic move higher, we need to make sure we take out this relative high at about 460. And that's exactly what this shows us here. Here's our relative high, 460. There's the break over. So it's going to be Jerome or NVIDIA, or the bears are going to come out and flex. So what's the number here? 438.14. So that 439 number is so important this week. And now, if we look over here to QQQ, and remember, as a reminder, we went through a lot more commentary on the video that we streamed on on Sunday earlier this morning. Go back and watch that if you want. I'll leave a link to that at the end of the stream. Link at the end of the video. But here we also talked about how this looks a little bit exhaustive. So we definitely have these hollow candles here, which is constructive, but we've not yet actually broken over this high. Here we have 387.98. Over here we got 387.75. So the exact same chart we're looking at the S&P, where we have this marginally lower high. Well, it got to it. It broke over the Fibonacci area, and now we're nearly in blue sky territory. What chart is in blue sky territory? Well, the NASDAQ. We have to just look at a different chart, meaning XLK. XLK is managed by Spider, and QQQ is managed by Invesco, which just means different weighting. But look here. There's a saying that chips lead tech and tech lead SPY. High, low, lower high, lower low, lower high, lower low. There's the retest of the high, and then there's the move higher. So we get over, and then we form a new blue sky territory breakout. That's XLK, which means Microsoft and Apple. If we now look over here at SMH, again, chips lead tech, tech lead SPY, what do we note? High, low, lower high, lower low, lower high, lowest low. there's the retest of the high, and there's the break to blue sky territory. And we don't even have a lower low. It's continuing to grind higher here. So chips are already in blue sky territory. NVIDIA is going to be reporting a little bit later this week, and it's right here around all-time highs. If it can boost up and drag chips even higher, that's probably going to drag QQQ. Again, high, low, lower high, lower low, lower high, lowest low, and then we go all the way back up. Let's look back at QQQ, and then we'll look at S&P because this is the pattern we need to see play out. We can't afford to stall out. High, low, lower high, lower low, lower high, lowest low, recovery back up to the high, and there's the break up. So QQQ has to break over 388, but we're not even at blue sky territory yet, right? QQQ has to make it all the way up here to roughly 410 to actually claim that zone. Now let's look at S&P. All right, here we go. High, low, lower high, lower low, lower high, lowest low, bounce all the way back up to the recent high, right around that Fibonacci area at 451.76. So that's really what I'm looking at going into this week. I'm trying to do things a little bit different to make sure that the story is easy to follow. We went through a lot of more information on the weekend review. I encourage you to watch that. It's now queued up here on the left-hand side. And if not, come hang out with us on Monday morning. We're going to be streaming live at 9:15 Eastern and likely live all week. And finally, our Black Friday sale will be launching on Monday. So please make sure you come back if you're interested in learning about that. If not, thank you so much for tuning in, and I look forward to seeing you on the next video. Best of luck this week.